All right, get ready, because we're diving deep into the world of cryptocurrency. You've been looking into this, and, well, it seems like everyone's got an opinion on it, a hot tip, or maybe even a scary story. We're here to cut through all that noise and help you figure out what's really going on in the crypto world, what's fact and what's fiction.
You got that right. Crypto can feel like, the Wild West sometimes. It's full of those exciting chances to make it big, but let's be real. There are some potential downsides, some pitfalls you got to watch out for. We're going to tackle some of those myths you've probably come across just so you can navigate this whole thing with a little more confidence.
Okay, so let's jump right into it with a myth that seems to be everywhere you look, you hear it all the time. Cryptocurrency is only for criminals.
Yeah.
It's like straight out of those movies, shadowy figures in those long coats making deals in dark alleys.
Yeah.
Is there any truth to that image?
Well, look, just like any kind of money out there, crypto can be used for things that aren't exactly legal, but let's get real.
Yeah.
The vast majority of transactions using cryptocurrency, they're completely above board. And here's the thing that most people don't realize. The tech behind it all, that blockchain, it actually makes it harder to hide those shady dealings. Yeah, it's harder to get away with anything compared to the traditional ways of doing things.
Wait a minute, hold on. Let's rewind for a second. I always hear this word blockchain thrown around.
hmm
Can you explain it in a way that even I can understand? For those of us who aren't exactly tech geniuses.
Okay, imagine a digital ledger, right? And it's open for absolutely everyone to see. Every single transaction, every single one gets recorded on this ledger. That's the chain part. Then each block of these transactions, they get linked to the block before it, all secured by, well, some pretty serious, strong cryptography. That's your blockchain.
So it's like a public record, completely out in the open, of every single transaction. You're saying it's almost impossible to hide anything suspicious?
Exactly. It's a game changer. Not only is it way harder to get away with something shady, but it also brings a whole new level of accountability to, well, everything.
That's really interesting. It makes you realize you got to be careful about those attention-grabbing headlines. They don't always give you the full picture. All right, myth number one, busted. But something tells me that's not the only misconception floating around out there. What else do we have on our list?
Let's tackle another big one. Cryptocurrency is not secure. This one really plays on those anxieties we all have about online security, those data breaches and hackers.
I have to admit, this one's made me a little hesitant to, really jump into the crypto world. You hear those horror stories about people, they lose all their savings to hackers, and it's pretty
Oh.
terrifying, not gonna lie.
I get it. Those fears are understandable. It's important to be careful. But the key here is to separate the technology itself from how people use it. The blockchain technology, that's actually incredibly secure. It's decentralized, which means it doesn't rely on one single point of failure, like, say, a bank. And it uses that super strong cryptography we talked about to secure every single transaction. Where things go wrong is usually, well, human error.
You mean the system's not the problem, it's us. Sounds familiar, doesn't it?
Right. It's like having a super secure front door, with a dozen locks on it, but then leaving the key under the welcome mat. In the crypto world, this translates to things like keeping your crypto on an exchange and then that exchange gets hacked, or not keeping those private keys safe. Those are like the passwords to your digital wallet, basically. Or even falling for those tricky phishing scams.
Okay, so those are definitely things to watch out for. Speaking of, for those of us who are new to all this, can you explain what private keys are exactly and why they're so important in the crypto world?
Think of your private keys, like the PI to your bank account, but with way, way higher stakes. It's what proves you own your crypto. If someone gets their hands on your private keys, they control your crypto. That's why it's so, so important to keep them safe, protect them, and never, ever share them with anyone.
Sounds like that old saying, with great power comes great responsibility, right?
Yeah.
It's true in the crypto world, too. If you've got that great security, you've got that responsibility to protect it.
100%. So the technology, it's designed to be incredibly secure, but yeah, unfortunately, human error, it happens, and that can create some vulnerabilities. But hey, that's true for pretty much everything, isn't it?
Absolutely. No matter how advanced things get, common sense and being cautious still go a long way.
Yeah.
Okay, so we've busted the myth that crypto is only for criminals, and we
Right.
tackled those security concerns. But there's still this feeling, especially with all the hype around crypto,
Mm-hmm.
that it could all be, well, a scam.
Yeah, that fear that the whole thing is just one big Ponzi scheme. Let's dive into that one next.
It's that classic fear of getting caught up in something shady, especially when it seems like everyone's promising you'll get rich quickly. It's easy to see why people might think that.
Absolutely. And sure, there have been scams in the crypto space, tokens that turned out to be completely fraudulent, just like in any new market, really. But, and this is important, this doesn't mean that all cryptocurrencies are Ponzi schemes. That's just not true.
So how can you tell the difference? How can you tell a legit cryptocurrency project from one that's a scam? There are so many out there, it's overwhelming, like trying to find a needle in a haystack.
You're not wrong. It's a lot to sift through. But just like you wouldn't avoid all stocks because you made one bad investment, you can't lump all crypto together. You got to look beyond the hype and really try to understand what's underneath, the technology behind it, and the purpose of the project. Take established cryptocurrencies like Bitcoin and Ethereum, for example. Those are definitely not Ponzi schemes. They're decentralized networks with real-world uses. They function completely differently from those shady get-rich-quick schemes.
Okay, that makes sense. But I gotta be honest, I still don't fully get the difference between like a Bitcoin or Ethereum and a Ponzi scheme.
Yeah.
Can you break that down for us? All right, so walk me through this. What makes Bitcoin and Ethereum fundamentally different from a Ponzi scheme?
Great question. Let's start with Bitcoin. It was created to be a decentralized digital currency. So it operates completely independently of any government or financial institution.
Interesting.
Yeah, its value, it's all determined by supply and demand, kind of like what we see in the stock market. Think of it like, digital gold. There's a limited supply out there, and every single transaction is recorded totally transparently on that blockchain.
Okay, so digital gold with like a public ledger that anyone can see.
Right. No puppet masters behind the scenes here.
Gotcha. That makes sense. But what about Ethereum? That seems to be everywhere I look these days, and it's not just a digital currency, right?
You're right. While Bitcoin is mainly focused on being that store of value, Ethereum, that's more like a platform, a decentralized platform where developers can, build and launch those decentralized applications.
Which are often called
dApps, yeah, you got it.
dApps, right, right.
Exactly. And all those dApps, they use Ethereum's own digital currency, Ether, to make transactions happen and actually run their applications.
So if Bitcoin's like that digital gold, Ethereum's like, what, a giant decentralized app store? With its own built-in currency.
You got it. And it's opening up a world of possibilities. And not just in finance, by the way. We're talking about potentially changing, like everything. Supply chain management, how we vote, you name it.
Wow, okay, that's a lot to take in. It sounds like with this whole crypto thing, we're kind of seeing the beginning of something really huge. Almost like, remember the early days of the internet? Back when everyone was trying to wrap their heads around what this whole World Wide Web thing even was.
Yeah. It's a great comparison. And just like back then, some companies were all hype and nothing else. Remember those .com crashes? Same idea with crypto. Not every project's going to be the next big thing, but that doesn't mean the whole industry is a sham.
So it's all about, like you said before, figuring out what's really promising, doing your research, understanding the tech, and knowing who's behind it all.
Exactly.
Okay, myth busted. But speaking of the internet, one thing I hear a lot about with crypto, especially Bitcoin, is, well, its impact on the environment. Which leads us to our next myth. Crypto mining destroys the environment.
Yeah, that's a big one and an important one to talk about. It's true, Bitcoin mining uses a lot of energy, no doubt about it. It's how those new Bitcoins are made, how transactions are verified, and then added to, you guessed it, the blockchain. But it's not the whole story.
Okay, so for those of us who don't quite get this whole mining thing, can you break it down? Why does it use so much energy?
Sure. Imagine a massive, global competition where everyone is trying to solve this crazy complex math problem. First one to crack it gets to add the next block of transactions to the blockchain, and they're rewarded with Bitcoin. That process, that's proof of work. And it takes a ton of computing power, which, you guessed it again, translates into serious energy consumption.
So it's like a giant Sudoku competition, but it's digital, the prize is Bitcoin, and everyone's computer's working nonstop.
You got it. Perfect analogy. But here's where that myth needs a little more context. More and more Bitcoin mining operations, they're switching to renewable energy sources, solar power, hydroelectric, things like that. And second, the crypto world, it's all about innovation, right? So there are these other ways, consensus mechanisms that use way less energy.
Wait, consensus mechanisms, that sounds awfully technical. Can you explain that in a way that, well, won't make my head explode?
Think of it this way. How do you get everyone to agree on something important? How do you get everyone on the same page? That's basically what a consensus mechanism does in the crypto world.
Interesting.
Yeah, it's how the whole network agrees on which transactions are legit, the real deal. Bitcoin uses proof of work, the one we just talked about. But another approach, it's gaining traction fast. It's called proof of stake.
And proof of stake is better for the environment. Tell me more.
Way better. In fact, Ethereum, the second biggest cryptocurrency out there, we're talking hundreds of billions of dollars here, they switched over to proof of stake just recently.
Wow, hundreds of billions. So how does proof of stake work?
So instead of all those miners going head-to-head solving those crazy math problems, with proof of stake, you have validators. They're chosen to add blocks to the blockchain based on how much cryptocurrency they stake, meaning how much they essentially lock up as collateral.
So instead of a math competition, it's more like a trust system.
Exactly. And because it doesn't need all that energy-intensive computing power, it's way, way better for the environment. Like night and day.
So the environmental impact of cryptocurrency, it's not as simple as some of those alarming headlines make it seem. It's not black and white, more like shades of gray.
You got it. It's so important to look at the bigger picture, to factor in things like the move towards sustainable mining, and of course, those new approaches like proof of stake. Now, ready to tackle our last myth.
Bring it on. I'm ready to bust some more myths. Hit me.
Let's talk about those crazy ups and downs of the crypto market, those dramatic price swings, our final myth for today. Crypto is too volatile to be a reliable investment.
Yes, crypto volatility.
Right.
It's definitely not for the faint of heart. But is it automatically a bad investment just because it's a bit of a wild ride? So is crypto too volatile? Is that a deal breaker for investors? What do you think?
That's the myth we're going to bust right now. It's true. Crypto markets, they're famous for those price swings. But here's the thing. Volatility in and of itself doesn't automatically make something a bad investment. It just means you got to be okay with a little risk, and maybe more importantly, really understand what you're getting yourself into.
So it all comes down to how much risk you're willing to take on.
Exactly. Just like with any investment, right? Understanding your own risk tolerance, that's key. But here's the interesting thing. That same volatility, it can mean big opportunities for growth. Those price swings that make some people nervous, they can also lead to some pretty significant gains if you know what you're doing.
So it's all about knowing when to ride those waves, when to hold on tight, and when to, maybe adjust your approach a bit.
You got it. But it's also important to keep in mind that a lot of those traditional assets, like stocks, they can be volatile too.
That's a good point.
Remember that dot-com bubble we were talking about earlier? That was a wild ride.
That's true. The stock market definitely has its ups and downs. No investment is completely risk-free, is it?
Not a single one. Investing, no matter what you're putting your money in, it always involves at least some level of risk. The key is to diversify, don't put all your eggs in one basket, do your research, and never, ever invest more than you can afford to lose.
Words to live by. Sounds like with cryptocurrency, just like with any investment, it comes down to knowledge and being real about the risks.
Absolutely. Knowledge is power, right? Especially in the world of finance and tech, and those two, they collide in a big way in the crypto space.
Well said. So there you have it. 5 common crypto myths, officially busted.
Myths that often pop up just because people don't really get how this technology works and the potential it has.
It's like you were saying earlier, it's always best to go straight to the source, do your homework, and not just take those attention-grabbing headlines at face value.
100%. Don't let fear or bad information stop you from exploring something that could be a really exciting opportunity.
Yes, exactly. Cryptocurrency and blockchain, they're not going anywhere. And when you have accurate information, you can jump into this world with confidence. And hey, who knows? You might even find some amazing opportunities along the way.
Speaking of opportunities, here's something to think about as you keep learning about crypto. We talked about how blockchain can make financial transactions totally transparent, but what about other industries? Where else could that kind of openness and accountability be a game changer? Could we use it for supply chains, voting systems, maybe even how we verify our digital identities? It's pretty mind-blowing when you start to think about it.
Now, those are some questions that'll keep you up at night. Seems like we've just scratched the surface of what blockchain tech can do, huh?
We're just getting started, and that's what's so exciting about it. It's constantly changing, always new ideas popping up, new uses for it. It's an exciting time to be paying attention.
Well, I don't know about you, but I'm ready to dive even deeper into this crypto rabbit hole. Thanks so much for joining us on this deep dive. It's been awesome picking your brain.
The pleasure was all mine. Until next time.